China has delivered its biggest stimulus package since the pandemic to help fight deflation and push economic growth towards its 5% target for the year. But many economists are warning it's not enough. Ingrid Willinge spoke with Raymond Yung, the chief economist of Greater China at ANZ.
So far, the Chinese central bank's pledges to ease more, and I would regard that as a financial package. Now, of course, in addition to the central banks and financial regulators easing, we also saw that the Politburo, which is the top governing body of the Chinese government, also pledges to support more by more aggressive fiscal spending. And also, President Xi Jinping also reiterated that they don't want to see the property price to fall further. I think that the market has just taken this verbal intervention seriously, and that's resulted in the stock market's rally in the last few days. But so far, all the packages seems to be more focused on the liquidity injection as opposed to real economic measures.
OK, but when you mention the fiscal stimulus, which of course seems to be a sure thing on the horizon, what will be the catalyst for the government pulling the trigger on that?
I think the government will possibly front-load some of the bond issuance in order to support the government spending. And in response to the falling economic momentum, we are keeping our GDP forecast of 4.9% this year, but the August number released a couple of weeks ago is very poor and reflecting a very worsening of the economic condition. Youth unemployment rose to 18.8%, which is, I would believe, is one of the highest in the last decade. So, and that's triggered the government action and the verbal intervention before the national holiday this week. And I just feel that so far, the policy measures that has been official released is not enough because the interest rate cut is only by 20 to 30 basis points, like 30 basis point cut for medium-term lending facilities. But more measures I expect to be coming and announced by other ministries.
Yeah, because I guess the question is the measures that we've seen, do they actually address the root causes of the issues in China? I mean, the government hasn't been favouring a growth focus in a market-driven economy. Common prosperity, state-owned enterprises, they're favoured. And this approach, it likely won't change, right?
Absolutely. I would just label the package so far as a financial package and liquidity injection to stabilize the financial market and to manage the price expectation. But the macroeconomic issue facing China is rooted by many microeconomics problems. For example, what you've mentioned about common prosperity, profit sharing by the private sector and financial industries, as well as the constraint from the external demand, for example, the increasing trade protectionism, and also the fleeing of foreign direct investor because of the social sentiment domestically in China. So all these the challenges and facing China. So the structural weakness will continue, and this stimulus package does not seem to me sufficient to boost or sustain the growth momentum or even revive the growth prospect because of structural weaknesses remain.
And property obviously is a big part of this. I mean, it's obviously been a big reason why we've seen the economy slow down. Are we starting to see a floor, though, on property? Is the property decline coming to an end?
It will take time, and we estimate that the inventory level, or we usually use the inventory turnover ratio, with the existing inventory as a ratio to the property sales, is still 3.5 years. So it takes 3.5 years for China to digest all the existing inventory. That's not the biggest issue. The biggest issue is the policy stand of the top government. So far, they pledges to, or they want to stop the property price to fall further, but it doesn't mean that they have changed the policy, and the overall policy stand is still to support affordable housing and leaving the private market for upgrading. But the majority of the housing demand will still be fulfilled by the affordable housing, which is a public housing project. So the old days used to be the regime that favoring the private sector, but this regime doesn't seems to be, or seems to me that this regime has ended, and the verbal intervention by the Politburo has not solved this problem.
Well, and it seems to be moving into this new economy, right? I mean, we're kind of moving from property development towards digitisation, in particular, you know, AI, EV. This is all going to be a focus of China's economy going forward. Is this bringing or will this bring long-term growth?
That's the hope of the Chinese authorities. Of course, that all countries want to boost their total factor productivity by going digital, even by going green and by going tech and innovation. I think this is a very legitimate policy direction, and it's very reasonable. But the problem is how big these industrial policy can help the current economic problem facing the economy. If China has already entered a lost decade with a severe deflationary scenario, and facing the economy and households are not believing in property, and the asset price continue to shrink, and we call this a balance sheet recession. If this happens, I'm not quite sure, how the industrial policy and the long-term economic reform can fix this asset price deflation scenario, which will be the main issue facing the economy over the next 2 or 3 years.
Yeah, of course, the US election coming up as well. There does seem to be bipartisan support for restrictive trade policies with China. So how does this impact the economy going forward?
A optimistic scenario is just 10% increase in tariff. A worse scenario would be 60% or even higher tariff rate imposed on Chinese goods. Now, the immediate impact based on what happened a few years back when Donald Trump was the president, we had seen an increase in export before the tariff imposed on China. But the longer-term impact, obviously, is the drop of Chinese goods exporting to the U.S. directly. There has been a lot of supply chain realignment, and production facility has been moved to other countries, Vietnam, Mexico, and Indonesia. This will be a ongoing process. So whoever becomes the U.S. president, I don't see that will change or reverse the direction in the bilateral economic relationship between China and the U.S. So I would just think that over the next 2 or 3 years, that the direct export between China and the U.S. Will continue to be shrinking.
Yeah, certainly worse off if Trump gets in. Raymond, really appreciate your time on the program today. Thank you so much for joining us.
Thank you, Ingrid.